What is up, everybody? Logan here again today with another video coming right at you guys. And we had another successful trading day today in the Discord with the expected move math that I continue to talk about and show over and over. We are now 69 for 72 on the zero DTEs. I do have a little spreadsheet too as well. This tracks all the trades, how much we kept, the return on collateral here. And you guys can see like this was that one tiny loss we took on the 14th about 10 days ago. And the other ones where I just shoot for that 6 to 10% return on collateral, I have to update today's trade. But let's get into this video and we'll do some math on basically why I chose the strikes I chose today, why I decided to take the risk off that I did, and what our fills were, and why today was a little bit tighter and not as beautiful of a day as we typically have trading these. But of course, the zero DT checklist, right? We'll update this real quick. Boom, boom, boom. Had a really busy day today. Basically, we were in this trade most of the day. I do want to take some time out real quick to say I really appreciate all the support from you guys. The videos have been doing absolutely fantastic with all the day trading ones lately with the zero DT credit spreads. We are on pace for my goal of 11,000 subs by the end of the month. It's October 24th. So if you guys aren't subscribed yet, I would really appreciate it big time. Let's do, what emoji should we do today? Man, maybe another fruit. Let's do strawberry. Let's do the strawberry emoji. That is one of my favorite emojis. So let's leave that one down below. If you guys want to support the channel for the algorithm, I really appreciate all the support. Then if you guys do want to come trade with us in the Discord, right? Check the link down below in the description. We go over the entry guide every day. You guys can get my trades as well as trades from Vance and a handful of other traders and help. And the last thing I do want to say is I am doing mentorship now. I just had a 2-hour meeting, explained to a guy what a credit spread was, when to apply it when I look at trading, and it was a really fun time, and I really appreciated his time. So these are the rates currently right now. Feel free to reach out to me in the email, whether you just want to chat with me, review some trades, or if you want to completely learn, if you're brand new. That's what I'm here for. So this is the pricing for if you're not in the Discord, and these are the discounts for being in the Discord. But let's get right into this video. One really interesting thing about today's trading day was we had a lot of chop and no real direction this morning, right? I didn't even honestly, I was barely looking at the market in the first 15 minutes because I'm a big fan of just letting the market do its thing. And we waited. Well, we finally got in a trade on the zero DT pumping iron. I put an SPX CCS on at 38.25, 38.30 for 35 credit is what I filled for. And this protected us from a 2% move up and has put us in between the 1 times the expected move and 2 times the expected move, right? So with the expected move math, if we go back over to the expected move chart for today, I put us right here, that 2% up mark, right? My short was 38.25, which is right at that spot, which you have a 91% since 2000 tracking all the days, a 91% chance that we don't move over 2% in that one day, right? So I decided to sell a credit spread there, risk my 500, pull 35 in, so really $465. And what this allows me to do is also look at the expected move high, 38.0175. So I figured, well, if we're going to break that today, right, 3,800 is a big psychological number anyway. So if that breaks, we're probably going to continue to push. So I want a little bit more room, right? So let's throw myself in, right? The expected move at close is 49 points. Let's throw myself in between those, just in case we get a break of that 3,800 early in the day, because then I can look at managing, whether that's stopping out, rolling into tomorrow, because we've gone up 6% in the last 5 trading sessions, which generally you see a 1 to 2% pull down after you get a good move like that before we either reset to go higher or we break support and then continue down. Overall, I like where we are on the playing field in general, and I think there's still really good opportunities for making money here in the markets. So we took that trade at 10:56 Eastern time, which is 8:56 Mountain time, the time that I'm on currently. And then if we go back over here and look at around that time, we were about 37.75 when I placed the trade. And you guys can see here, that's when we basically, that's what was tracked at 11. So this trade actually went against us the whole day. I kind of expected, 3,800 to be a big resistance range. I thought maybe right here after we put this on that we were going to be in some sort of a downtrend where maybe this fails and we go back towards this close, right? Like this previous close, we bounced off 3,800, it's time to leg down. Well, that didn't happen, but the market took so long to push up against us that we really were only down, I think, 2x credit at the highest point. And then I did make the call out right around 2 o'clock to take, or sorry, it was right around 2:40. I didn't like that we were heading back towards the daily highs. And generally, right, that's the rule of thumb. If you're going to retest something 3 times, that's generally the time when it breaks. So I said, all right, we're out. Closed for 10-cent debit. I couldn't get my 5 cents to fill. And then, of course, we started to rock it up. I felt good. I'm glad I was out. And I didn't even look at re-entering. But guess what we did? At the end of the day, we still closed within what was expected, right? Really interesting. Just super, super interesting how the math and the odds continue to play out. And a lot of the time, we don't exceed the expected move. It is rare for us to do so. We exceeded it, but we did not close outside of it, right? And that expected move, for anybody who's brand new to credit spreads or zero DTE trading, as you may be in this video, over here, right, gap up, gap down, expected move math, right around here, that expected move from the previous close is what we gauge that off of. And the reason we do that is because if you're going to take a trade and you don't have a criteria for getting in, right, you're gambling. Every trade you put on because it feels like the right thing to do, you might as well just open up blackjack on your computer and go nuts for an hour or two, right? Because if you don't have a reason to get into a trade besides the feeling that it gives you, you are purely gambling. And also when you're feeling, right, like, oh, I should get into this because I feel like it. And we've talked about expectations, right? And how you should be rigid on your rules and fluid on your expectations. Because if you feel like something's the right thing to do and it starts to go against you and now you feel bad and you chop that trade and then it goes in your favor, you're sitting there and you feel like a clown, right? Like I almost need like the clown Zoom face, right? Like you can actually wear that. And I might do that one day if I get completely destroyed in a trade. I'll put the clown face on. But that's why I go over these in every single video, because the expected move should be the basis for your trading, because that's what the market makers do, and they continue to make money every single day while you try to guess which way the market's going. So I continue to show you guys why I put the odds in my favor. It was not the prettiest trading day today, though. I only got a 5% return on collateral, one of my lowest trades. But overall, still made money, still preserved our capital, because that's what the stock market is for. So where'd the VIX? The VIX was around 30 all day. It's a big psychological number, so I really didn't think we were going to explode much further. Did we exceed the EM on Friday? We did. And we exceeded it today, but we did not close outside of it. So, right, it's that thing. We're trying to figure out how often does that happen. That's my next move. Sizing a solid 6% per trade, 6% of your account, right? Because if you even if you get a 10% return on 6% of your account, that's 0.6%. Do that 5 days a week, and that's a 3% growth on your account, which to me is good, right? You got 100 grand, you're only risking 6, and you could make 3 grand that week if everything works out perfectly, right? And today's trade, we were only in it for 3.5 hours, and it's a 6 hour, was a 6.5 hour trading day. So overall felt good. The trade timing, like I said, that's why we go over this every video. I did not have a great feeling up here. The setup wasn't great. We did dip, but at the same time, that was pretty quick, number one. And then number two, we went all the way back up anyway. So if you shorted up here and didn't take your profit, you probably got steamrolled later. So I waited for the setup. I waited for this time where I thought we were honestly going to break down, but credit spreads are forgiving when you're wrong, and you can still beat the premium out by the end of the day if you're doing zero DTE. right? So back to the checklist, why I chose the 38, 25, 38, 30. I went over it a little bit ago. That 2%, right? That you're good 91% of the time. And today we were, right? Closed it out, got out, said, you know what? Just not worth holding on for the rest of the day, in my opinion. I'm glad we didn't. So 2x the EM high, didn't have any premium there. That's one of my favorite spots to take a trade, is either 2x the EM low or 2x the EM high right here. No premium in either spot today. So we had to work around these EM highs and lows, get right outside of them, and use these odd-based probabilities to help us with that trade. Still puts us up on a really good streak with this strategy, and I'm just super pumped with it. And I'm glad that you guys did really well today who traded them with us. Risk management, like I said, today was a rolling day because we're already up 6% in the last 5 trading days. The chances we keep steamrolling, I could have rolled even when we were at 37.90. You know, I could end up rolling those into tomorrow for like 38.60, 38.70s, right? And we'd still be outside of the expected move for tomorrow by about 1.5 times. But even if we exceeded it by, you know, 1 time, 1.5, and I had to roll again, I'd feel really good knowing that, you know, all right, let's say we got a 2% move tomorrow to get tested there. That'd be an 8% move in in 6 trading days. Very uncommon. Even in a bear market, you're going to have a cool down session that allows you to get out of your trades. So like I said, we set our expectations. We're in a bear market, still a tough time to trade. So in my opinion, you know, just do what you got to do to keep your port going and just set your standards, your risk management, and everything like that, just so that you know what you're risking every day, because you are risking your hard-earned money. You want to know what you're doing and what the setups mean. So that's going to be everything for me in this video. I hope you guys found some value in it. Let's do it again tomorrow. I'm trying to really get even better at this. And my goal is hopefully by the end of the year to be at least 94 for 100. And then we'll go over, Vance and I are working on this really nice Google sheet that pieces everything together. So I really look forward to it, but I appreciate all the support. Make sure you guys leave a like, a comment, and subscribe below if you haven't already. And I will see you guys in the next video.